So when we talk about doing what the banks do, right, operating using infinite banking and all that stuff, this is exactly what we're talking about. As an example, in 2002, Bank of America reported an extra $570 million in additional revenue and $170 million in net profits simply by using bank-owned life insurance. Now, I actually got that statistic from reading the book Pirates of Manhattan. So think about it this way. Wachovia Bank also says that bank-owned life insurance added 3% to its total earnings. Think about the power and the leverage in this. And the crazy part, when I talk about infinite banking, and this is why, if you haven't seen, I'm going to link the playlist up here for the infinite banking training playlist that I have. And when I talk about infinite banking, this is what I'm talking about, is leveraging whole life insurance to benefit and create more efficiency and leverage that makes a 1% to 2% enhancement or hedge on everything you do in your financial life. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, I want to talk to you about the 8 reasons you should be saving your money inside of a whole life insurance policy. Now, I know that may sound weird to a lot of people, but I promise if you stick with me on this, this will all make a lot of sense. All right, so getting right into it, let's just get into number 1, and that is that banks simply don't manage conservative investments well for the long haul. Think about it. Look back to the 1929 crash, look at the subprime crisis in 2009 as an example, when Bear Stearns, Lehman Brothers, those companies went out of business, investment banks like that. You know, banks have shown that they have a disposition of risk, and they're not good at saving your money. So while they're trying to get you to save your money inside of them for safety and liquidity, ultimately banks fail all the time. And while there is the FDIC, ultimately I'm a big believer right now that banks are, the FDIC at least, is woefully underinsured, underfunded. So one of the reasons that I love utilizing life insurance as a life insurance contract as a savings vehicle is because of the fact that over the long haul, the interest rate is going to be 2 to 3% higher than any 10-year treasury bond. So think about it this way. When you buy a treasury bond, the idea of them is to have the guarantees over about a 10-year period. But the problem with a treasury bond is you give up the liquidity of that money. So when you understand this, why would anybody ever put money into a treasury bond instead of a life insurance contract, a whole life insurance contract, if they know that over the long haul, and there's over 100 years of history that shows that, historically speaking, over a 10-year period, whole life insurance is going to outperform the 10-year treasury bond market by 2 to 3%. So it's a no-brainer. I think what I love about saving money inside of whole life policy, life companies from a management perspective, is you have to look at the life insurance company as fiduciaries, right? So life insurance companies are bound to look out for the policyholder's long-term interests, right? As a policyholder of a mutually held company, you are effectively an owner in the company. And so they're always looking up to about 15 years out. And the reality is banks aren't doing that. Banks are just trying to go for the profit right now. They're not long-term mindseted as much as they want you to think they are. And so that is number 1. Now, the second reason I think everybody should be saving money in a whole life policy is because of the tax benefit. Now, it's key to understand that there's no annual taxation of capital gains or cash value increases inside of life insurance contracts, right? So you compare that to most company or bank-owned taxable investments, and those are subject to interest, dividends, and capital gains tax in most situations. So the third reason that you would want to save in a whole life insurance contract is because it comes with a minimum guaranteed death benefit, which obviously doesn't exist at all in traditional banks. So when we get to number 4, the fourth reason, I would say it's because you have the opportunity to increase the net gains on investments by 1 to 2%. Now, I know that may sound weird, it may not sound like much, but the bottom line is when you're talking about your investments over a long period of time, and as the compounding of your money grows, 1 to 2% is a huge number. So when we talk about doing what the banks do, right, operating using infinite banking and all that stuff, this is exactly what we're talking about. As an example, in 2002, Bank of America reported an extra $570 million in additional revenue and $170 million in net profits simply by using bank-owned life insurance. Now, I actually got that statistic from reading the book Pirates of Manhattan. So think about it this way. Wachovia Bank also says that bank-owned life insurance added 3% to its total earnings. Think about the power and the leverage in this. And the crazy part, when I talk about infinite banking, and this is why, if you haven't seen, I'm going to link the playlist up here for the infinite banking training playlist that I have. And when I talk about infinite banking, this is what I'm talking about, is leveraging whole life insurance to benefit and create more efficiency and leverage that makes a 1 to 2% enhancement or hedge on everything you do in your financial life. And bank-owned life insurance is one of the most popular things. Like, if banks are doing it, you should be doing it. I mean, think about it. Banks are the best institutions in the world at creating capital, creating leverage to create capital with less risk to them, and they're utilizing whole life insurance, so why wouldn't you? So the fifth reason that you want to save in a whole life insurance policy is because you always have cheap access to money. Now, you can leverage your policy and collateralize it for access always. That's going to be guaranteed to be cheaper than what you're earning on your money. That is the leverage. Now, that's kind of an extension on number 4 when we talk about creating efficiency. They have that efficiency because of access to cheap money and that leverage that comes with it. And when you really operate inside of a system, that efficiency that comes with everything. And once again, you're going to have to watch the infinite banking training playlist that I put up there, but that is really the key to it. So now moving along here, we're going to go to number 6, and that is by saving money into a whole life insurance contract, you actually get professional money management that comes along with it. So once again, when you invest, when I say this, I'm always using the context of investing or saving your money into a mutually held whole life insurance company, right? And when you do that, your money goes into their general fund, and the general fund typically has billions of dollars in assets. And the crazy part here that a lot of people have their hard time wrapping their head around. So there have been over 170 years of proven success where life insurance companies have been proven to be the best long-term risk managers in the world without giving up liquidity of your capital. Think about it. Like I said, most times it's a give and take. You have to either get the guarantees and get the safe returns and give up capital, give up control, give up liquidity of your money, or you have to take risk and you can keep liquidity. But life insurance, whole life policies are the only place where you can kind of have your cake and eat it too. The 7th reason is that it's actually a secondary business. A lot of people don't think about it like this, and I know this may be a kind of a weird way of positioning it for a lot of people, but the bottom line is, as a policyholder with a mutual company, you are effectively a shareholder of the company, right? Like the same thing as a shareholder would be with a publicly traded company. So what happens because of that circumstance, they're able to compensate you not only on the returns of the general funds and the investments inside of the general fund, but you're getting your dividend attached to your whole life policy based on the overall profitability of the entire company. And that profitability includes all of the lines of products that they have. So when you're investing or saving your money inside of a whole life policy, don't forget, life insurance companies have other lines of business that they're doing. They're going to take their index universal life policies. They're going to take their term life policies. Those two products are the most profitable products for the insurance company, hands down, right? So when you look at that and you look at the whole life insurance product is one of the least profitable products for the life insurance company, and you look at those other products, well, I want to own the product that's the least profitable for the company, that's going to benefit from the other lines of profitable business that they're doing, right? Like, once again, life insurance companies are the greatest managers of risk and creating the best returns with the lowest risk possible in the industry, in the market, right? They've been doing it for 170 years. This is why virtually no mutual companies fail over the time. Like, I can name one mutually held whole life insurance company that has failed in 170 years, right? Put that into context, almost 570 banks failed in 2009 and 8 and 9 alone, right? So it is what it is. So that's probably a different video. If you want to look up in the description above, I'll put a card up above and you can watch that video and where it talks more about that. But moving on here, I'm going to get to number 8, and number 8 is actually a really good one. By saving in a whole life policy, you actually get living benefits. So a lot of people think you're going to have returns and performance inside of the policy that's going to far outperform your bank account, your savings account, your checking account. But on top of that, you're going to get a death benefit. But on top of that, you're also going to get living benefits. So if you become critically, chronically, or terminally ill while you're alive, you're going to have access to your death benefit, a portion of your death benefit, I should say, while you're alive to utilize for your medical directive in any way that you want, right? Like, so I'm a big believer in having alternative medical treatments, right? I'm not a big fan of the Western world way of dealing with chronic illnesses like diabetes and cancers and stuff of that nature, right? Now, there's a place for it. I don't need a lot of hate comments about that, but my personal belief is the body is a really powerful thing. And sadly, a lot of the best treatments in this world when it comes to treating these diseases are not covered by insurance. So to be able to have your own pool of access to capital so you can make decisions not based on money, but based on what you really feel is best for your life and for your own medical directive. And so having living benefits and having a savings account that will provide all of these benefits for you is extremely powerful and liberating. So that is the 8 reasons that I believe everybody should save money inside of a whole life insurance policy. So if you found value in that, please make sure you subscribe, hit the bell, that way you get notified every time I launch a new video. If you have any questions at all, comment in the comment section below. Until next video, I hope you have a blessed, inspirational day, and we'll talk soon. See ya.